Folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and welcome aboard. Thanks for spending some time with me this evening. And I'm going to ask you right up front, and some of you are going to be impressed because I usually forget this. Hit the like button, subscribe to the channel. Thanks for being here. What we're going to talk about, obviously, are the futures. How are they opening up? We're going to talk about equities. We're going to talk about commodities. We're going to talk about currencies. We're also going to go over the Federal Reserve's balance sheet, market valuations, as well as some stories that are going to help guide us to where this market may be going after this big bear market rally. And yes, I'm saying it is a bear market rally, so you'll get an idea of where my head's at. So let's first, as we wait for people to come on in, let's say hello to people. Hey, Kat. I saw your, I was going through notes earlier. I saw your request on Pfizer. I was going to go over that. Yep. Falcon. Hey, brother. Franklin. Hello, Sherry. Two females on right now. Is there a third out there? Let's go for the trifecta. Trader Isaac. Hello, Bob. Not looking good for St. Petersburg. What's wrong with St. Petersburg? Oh, St. Peter's. What's wrong with it? I think you mean St. Petersburg, right? You have a period there. It's abbreviated. Tom Lou. Hi, Bob. Your review on Zim and Sava. Okay. Paul, hello. All right. Girl power. That's right. Okay. As long as we can define what a girl is or a woman is nowadays, we're good. We're good. It's great to have you here. Love having a broad audience. Okay. But pardon the pun on that. That was an unintentional pun. I said broad audience. Okay. Let's get to it. The NASDAQ moved lower, and we've just seen a big reversal bar. We are now higher on the session. Interesting. That's good stuff. I'm glad you have a sense of humor. Thank God. So your NKX analysis makes a lot of sense. Yeah, I like that trade. I mean, think about it. What is that? A 8% real return? That's not bad. Very little risk. Granted, it is California bonds. So yeah, I guess there is risk there. Bob, in one over your charts live, you said the short covering rally would be fierce. Was that what do you think? Yeah, I think that this is a short covering rally. Yeah, the most ruthless market rallies are bear market rallies. I've been doing this a long time and tried and true, man. Those bear market rallies are ruthless. And I think that's what we're in right now. I mean, we're only what on the NASDAQ 5% or so off of all-time highs. I mean, think about it. It's crazy. All right. So the NASDAQ looking good here at the open. We had a good close to the week last week. The Russell 2000 looking the same as the NASDAQ. Looks like we are. Oh, I see what they did. We broke out on Friday afternoon, and this was a retrace and a retest. Interesting. Now we're going to get a continuation move up higher here. Now it makes sense. Okay. Let's go to. Did they do the same thing with the? I guess they did. Yep, they broke it out. This is a pullback and a retrace. So it looks as though we're going up higher here on equities. Let's check in with the S&P 500. Yeah, we are very close. As a matter of fact, we've already hit a new intra-week high, a week over week high, not an intra-week high. My apologies. So new weekly higher high already. Okay. Let's see what else we got here. Let's check in with the dollar. Equity's looking strong. How about currencies? The dollar is looking strong here. I want to check in with the yen. We got long of the yen last week. And the reason was this, is that if you go take a look at a daily chart, come on, here's your RSI. We closed out the day on Friday with RSI at around 13. So pretty unsustainable to the downside. So I opened up a call spread. I bought the call spread. We sold deep out of the money call options to help finance our purchase of deep in the money call options. So we're looking for a rally here fairly soon on the yen. If not tomorrow, probably on Tuesday, Wednesday. And if they don't rally it tomorrow, I'm probably going to look to add to the position even more than what we are right now. But at this point in time, I want to see some sort of a reversal day, meaning they close it down. Excuse me, they open it down, it closes up. That's kind of difficult because usually the yen, it trades overnight for the most part in Japan, and it gaps up or gaps down in the United States the next morning when our markets open. So we'll see if we can get this any good price action tomorrow. Let's take a look at what gold's doing. Gold is up slightly. Let's drill down here. So what we're looking at here on a 30-minute chart is a series of higher lows. This is good. Now what we want to see is a breakout to new higher highs, and that'll set the stage for a next leg up for gold. You can see it's coming under some pressure now. Copper under pressure here. The weekly chart still looks good for copper. But it looks as though we're going to do a little bit of correcting here. So I would avoid copper. I haven't said that in a long time. Avoid copper right now, very short term. Silver up by over 30%, a little bit of a pullback here. It's a very similar chart as to what we're seeing on gold, right? We're getting our higher lows. Now we need more higher highs. We need that continuation breakout. Sorry about that noise. Let's take a look at agriculture. And for those wondering, why do I spend so much time on commodities? Well, we're in an inflationary environment, so it's really critical that we focus on commodities because there's going to come a point in time, it's probably not going to be for the next couple of years, but you're going to see commodities begin to weaken up, and the best places to be is to the short side of commodities. We want to be in that trade, but right now we're pretty heavy to the long side on commodities. So that's why we keep an eye on these names because the path of least resistance right now is clearly the upside for commodities. So corn looking like it's setting up for a continuation move up higher. This is a flag formation. Consolidating nicely. That's going up higher. Soybeans, strong, moving up. Wheat, moving up. It gapped up on the, is this accurate? When was last Friday? 24th, no? Or 20, it was the 25th. It gapped up on the 25th, and it looks as though we're consolidating. We're going to press up higher here on wheat. So inflationary pressures are very much alive. Natural gas, gapping up here. This is one of our watch stocks for Boyle. The ETF Boyle is one of our watch stocks. If you didn't see my best stock charts for the coming week, it's on YouTube. I posted it not too long ago. If you are on our email list, I included a link to it in the email that had the invitation to this live stream. So natural gas looking very, very strong here. Oil, light sweet crude, under a little bit of pressure. The release of oil out of the Strategic Petroleum Reserve, it's going to have a very short-term impact on oil. Plus, the Europeans apparently are not going to ban Russian imports. So uh, that's going to add pressure on oil, but longer term, it's going up higher because we refuse to drill here. We are beholden to foreign oil. I just want to check back in with the yen. All right, not looking that good. Not looking horrible, but not looking great. Bitcoin rocking here. Really, really rocking up 2070. We have been dollar cost averaging into Bitcoin. Very small amount. Very, very small amount. I think that, oh, let's check out the VIX. The VIX opened up, now down, or flat, I should say. I see a lot of comments coming through. We're going to go to them. Let's do it now. DZ Burton, welcome. Paul, hello, brother. OG1 Kenobi, hey, buddy. I'm doing good, pal. Luis, hey, brother. Hey, Bob, did you see the memo apparent? Did you see the memo apparent from Applebee's executives about them being happy about the rise in gas prices? Helps them with salary negotiation because of the rise in cost of living. No, I didn't see it. I'm not sure how that helps them with negotiations. because there has to be a commensurate rise, you would think, although you're not really seeing that, a commensurate rise with cost of living as prices go up higher, where the living standard for the working Americans is really evaporating. You're seeing the death of the middle class. Just watch the best stock charts for the coming week. Good. Thank you very much, Paul. Uh, Nigeria said they were going to increase their oil and NG output to support Europe. Okay. Good info. I understand what you're saying, but when do we buy or sell? What 77 man 77? What is it that I said that we were talking about? Commodities? Um, let me know. Okay. XRP. I like XRP. You can't buy it here. From what I understand, you need to buy it through Europe, unless you know a way to buy. Oh, you're up in Canada, so you could probably buy it up there. It's looking good. It's going up higher. Uh, I know a lot of exchanges, at least U.S. exchanges, that if you hold XRP, this is what I'm told, that if you hold XRP, that once it rises to $10, they have the option to sell your position. So you may want to check with your brokerage account or broker to see whether or not they have that option. And if you don't want it diluted at $10 per share, move it off to a wallet so you're protected. I love XRP. You know, the fact that they have the SEC involved, they won't let you trade it. That means there's something very there's a lot of utility to it. So I like it, and if I could buy it, I will. Applebee's executive claims higher gas prices make people more desperate, so we can. I see. Okay, it's the world we live in, I guess. Crazy. Okay, let's talk about the Russian stock market. Uh, the Russian stock market has already opened up. It opened up late last week, and you've seen a pop here. Now, unfortunately, in the United States, names like Lukoil have yet to reopen. I don't know why they're not allowing these stocks to trade. They can't be worried about a crash because the Russian stock market is higher now than when it was when it stopped trading back on February the 24th. So I have an options position on the RTX. Thank God it's a bull credit spread. So I'm not really feeling the pinch of time decay all that much because I sold options as well. But I'd like for them to reopen the goddamn stocks and allow them to trade. I did a search on Google for when they would allow stocks to reopen or these stocks to reopen in the United States, trade again. I did it on Google. I found no searches, but that's no great shock. They have a history now of suppressing search results. So I checked with DuckDuckGo. Now they've joined the bandwagon. I'm not sure if they're suppressing results. I don't know what they have to gain, but it seems really weird. There is not one single article out there that I could find about Russian stocks reopening here in the United States. So I find it hard to believe that they're doing the investor any good by not allowing them to trade or allowing people to sell to get out of those positions. So something nefarious is going on. And the reason why we bought the RSX is that we had, again, this is an options trade, so limited downside risk, but lots of upside. RSI 13 on a country ETF. I mean, that's pretty oversold. And you take a name like Lukoil, RSI at 9.77. This is one of the biggest oil companies in the world. So I would like to get a piece of that, but that's probably not going to happen. So that's that on Russian stocks. Um, Okay, so we didn't do a Thursday night stock charts live. Normally, I'll cover. My eyes are so dry tonight. I would cover the Fed's balance sheet on Thursday nights. Now they raised interest rates the week before last, but they also increased their balance sheet, which they said they were going to stop doing back in November, but they pulled back on that and they increased bond buying by 40 billion the same week that they raised interest rates for the first time since 2018. So what did they do last week? Well, the party keeps on going. They hit a new all-time record high on the Fed's balance sheet of $8,962,474, a stone's throw away from $9 trillion. To put that into context, prior to the GFC back here, their balance sheet was about 800 billion bucks. So you can't think that they're serious about fighting inflation if they don't stop monetizing the debt. Now, why are they doing this? We've never had a time in history where you've had the Federal Reserve enter a rate hike cycle when the yield curve on the twos and tens has been at the precipice of inversion, meaning going negative. Now, in and of itself, not a reason to go selling stocks. But when things begin to rally, when yields begin to rise yet again, look out below. Now, we were inverting on the yield curve right before COVID, and the rise in yields began. And what happened? COVID hit, market crash. So we're on borrowed time here. So the thing to remember is that there's something very, very wrong with this economy. And the bond market is sniffing it out. And when you take a look at Donald Trump back on the campaign trail, hammering home Hunter Biden's laptop, they are going to let this world burn to get the distraction off of DC and over to the Ukraine and regime change over in Russia. They continue to rattle the cage of Russia, and it's not going to end well. All of this is in the face of what we're seeing with the Great Reset. It's no longer a conspiracy theory. It is here. It is happening. And whether it be digital currencies, which is the final blow, your freedom is done once they get the digital dollars. So if you don't know what that is, do some research on it. Digital dollar, Federal Reserve, do a search, and all it is it's going to be money deposited into your account, whether you work for it or whether or not you're on the government dole, and it's going to have an expiration date. So it's going to be programmable. If you use too much carbon credits for the week, you're going to be blocked from purchasing gasoline. You're going to be blocked from doing certain things. Your freedoms are under attack. And they can't get this done unless you are afraid. You need to be afraid of whether it be COVID, what's in Hunter Biden's laptop, the fear of, God forbid, President Trump comes back, the fear of nuclear war, the fear of Russia, the fear of China, whatever they need to keep you afraid. Fear porn is everything. And that way they distract you and they keep you from looking at this, the Great Reset. So I'll share this article with you. When you get a chance, take a look at it because it's for real. And even our fearless leader, if he's awake, doesn't even hide it anymore. My system is slow, so my apologies. I'm trying to bring up comments. Chrome is not responding. Chrome sucks. There's something wrong with Chrome. Finally, digital dollar will end our civilization. Moses needs to part the Red Sea. Yeah, you're not kidding. You will own nothing and be happy. That's absolutely correct. That your Trudeau is way too ahead of the curve, man. He Klaus Schwab has got to rein him back in. I live in Canada. Seriously thinking of Mexico. I like crypto, not Trudeau dollars. Absolutely, I'm with you. Yeah, billionaire. Something's wrong with Chrome. I don't know whether they're too busy spying and it's taking up a lot of juice or what. Uh, and are all legal voters to understand Second Amendment of Trump was to cover Biden crime family deals with Ukraine. Oh, second impeachment. Yeah, no doubt about it. No doubt. The it's at first it was difficult, but then now it's just easy. Whenever you hear one of these leftists accuse you or accuse somebody of something, they're doing it. So they accused Russia of Trump of conspiring with the Ukraine. All the while they were conspiring with the Ukraine. So they're making billions. And it's not just the Democrats. Look at Mitt Romney's kid. Also, Dunderhead, John Kerry, the climate czar, flying around on his private jet from Massachusetts, which wherever he lives in Massachusetts, over to Martha's Vineyard to attend Obama's party. Uh, these people are the biggest polluters in the world. Yet they're gonna dictate to us how we're gonna live. Arch criminals, and all the while, as the Great Reset is happening, we're playing into their hands. Our economy is falling apart. You missed sentiment survey slumps further in March. Inflation expectations at a 41-year high. No crap. Because inflation is at a 41-year high. It's well beyond it now. Look at this. Just crashing. Lower highs, lower lows. US home sales plunge fourth straight month. Folks, the inflation that we're seeing is going to be good for homeowners because the cost to replace your home is going to go up higher. Unfortunately, so are, in all probability, I can't guarantee this, but you would think logically so are your costs for insuring the property because the replacement cost is going to be more expensive. So you're going to see inflation on the insurance end. So the building industry is slowing down. Why? Input costs to build and interest rates. Home interest rates are moving up higher dramatically. So you take a look at the home builders. I'll go to the chart in a moment. Mortgage affordability crisis imminent as mortgage rates hit 3-year high. Look at this skyrocket. What a move. And this is only going up higher. Mortgage applications evaporating. Affordability impact on, wow. Existing home sales falling. The housing sector is coming unraveled. And when you take a look at the home builders, I mean, uh, this is a monthly chart of the HGX and the housing index. And we are at the verge of a major break here, assuming that we close out the month below, let's say, 430 on the HGX. Look at this. Stokes, lower highs, lower lows, breaking down. This is going to be a major, major short very soon. Wow. Weekly chart of the home builders. This is bad. When you see a bullish key reversal bar. And for those not familiar with my terminology, if you're watching this on YouTube, go down. There's a five-part video tutorial, free. My 5 top favorite candlestick patterns, free to you because I like you. Bullish key reversal bar. What did we do last week? Not only did we not get a follow through, which should have been a fairly high probability, we came very, very close to taking out the prior lows, and we closed down relative to the prior close. This is a very, excuse me, very bearish setup. So it looks as though I may be shorting the home builders as soon as this week. We break down below 405, it's going to be Armageddon for the home builders. Let's take a quick peek at KB Homes. I don't have KB Homes up here. Did I not migrate it? I did not migrate it. Wow. Even worse, KB Homes is really, really weak here. So here you have it. This is a classic. I know Kat's out there. She's a big shorter. I know she's out there thinking about shorting the home builders. Here's your lower high. And there's your break of support. This is a short. The path of least resistance on the home builders has now clearly changed to the downside. And when these go, these are cyclicals. When these go, they go really hard. Look at that. Look at the volume last week. Wow. Let's go to some comments. Carrie, Mr. Heinz Ketchup lives on Beacon Hill. Yeah, his wife is the heir to that fortune. Not he didn't make it, right, Cap? He didn't make his own money. Bottle of spring water more than double because of shipping and gas prices. Crazy. Open the Keystone Pipeline, 250. Yeah, no doubt. Pelosi, Biden, McConnell, Schumer, and more. Their kids work for UK and gas. What? It's a piggy bank. Hunter got 80,000. Yep. KB Homes earnings miss on EU. Okay, good. Thank you for that, Paul. As home builder, I have started to reduce my footprint on the past 6 months. I see major decline is coming in remodels, additions, and ADUs. So you do purely home building. Now, if you were looking to redo a large project on your home, would you do it now because of rising inflation costs, or would you put it off because the demand for that work you expect to decline? If you were the home owner from that perspective, what would you do? Because there's a ripple effect. You know, home builders slow down. It has a ripple effect through the entire economy. I know you are. Even Warren Buffett thought Oxy is. Yep. Yep. Yeah, as he married into it. Franklin, yeah, crazy. Average rent has risen to over $1,700 a month, but they won't include that in the CPI data. CPI is rents are I believe the rents are, well, rents make up 33% of the CPI, and they use the owner's equivalent rent equation. They don't use your data. They don't use average rents. It's mind-boggling. And it's not incompetence. I always want to say incompetence. It's not incompetence. It's fuzzy math. Okay, all feedback is about budget, and they are anticipating a future chance to build a lower cost. Gotcha. Okay. Thank you for that. Okay. Moving on. Who wins from all of this? Ukraine, LNG. How are the LNG producers doing? Or exporters, I should say. Cheniere is up nearly 50%, 47.34% on the year so far, and it's going up higher. It's extended. I would love to buy it. I can't right now, but this is going up, but it's very overbought. This is a monthly chart. RSI 86.23. Weekly chart. It's going up high. Look at this move up higher last week. Nearly 13.25% in 1 week alone. There's always winners and losers. Fat cats and starving dogs. Okay. Let's do some chart requests. Folks, this segment's going to be brought to you by our friends over at TrendSpider. 35% discount code below. Automated technical analysis at its finest. If you're not using it, the big banks are using it. They have been using it for a long time. Not necessarily TrendSpider. They've had the tools at their disposal. What do I have? Another workstation open? I got to close it out. I have so many windows open. I have to close it out somewhere. There we go. Okay. So, again, 35% discount code below. And while the big banks have been using a different version for a very long time, TrendSpider has brought that technology to the retail investor. So take advantage of it. I'm trying to bring my windows back up. Chrome creeps free. Oh my God. Okay. You have no idea what I'm going through right now. Okay, you're back. 35% discount code below. All right. CPI formula is a joke. If you are naked and live in a car, in a cave, okay, live in a cave. There is no inflation. Yeah. Okay. First one I have to do is for Kat because she's been waiting. She posted a message on YouTube a couple of days ago, and I got to check the members area. And she wants to know about Pfizer, the demon company from hell. Is it time to short? Well, on a monthly time frame, there's only a few trading days left to go. Ordinarily, I wouldn't use the month to time a short trade or a long trade unless I was near the end of the month, and we are near the end of the month. So we'll talk about it. Franklin's got CPLP. He also wants GLNG. Okay, yeah, that's Golar. Okay, so Franklin, I got yours. No need to type them in there. Okay. So peek that back here. December 2021, overbought on the third standard deviation Bollinger Band, correction. All right, same thing happened here. Right, pierced the third standard deviation Bollinger Band, pulled back, The however is that we rallied back. So if you're going to use a monthly chart, I'm fine with opening up a short position here, but tight stop on a breakout above this upper band of resistance. So how do you know when that is in the books? You're not going to know for a year. Excuse me, a month. Duh. Another month, whether or not it closes above that resistance level. So I'm not loving the monthly chart as my mechanism. I'll keep it in the back of my mind where we're at resistance, but I want to keep it a little bit more concentrated to weekly and daily charts. Now we broke out the week before last, the 14th, the week of the 14th, attempted continuation move up higher last week, but then we did a bearish reversal bar. Now, normally I would say, okay, if you're so inclined, short it on a new weekly lower low. The thing to remember is that you're going to have a potential retest of the breakout point here in green. So we broke out. We're going to pull back. If I were bullish on the stock, which I'm not, I would, because I hate the company, I would want to see a retest and this to hold. So you're going to have a defense of, let's call it 51.50 per share. Now, if that fails to hold, then it's a short. If we close out the week next week down below this lower band of support, and I'll share this with you so you have it for future reference. I would lean into the short side. Yeah, they're not giving up on the COVID grift. So, people just got to start, these mandates. If somebody wants to get a shot, hey, it's no skin off my back. I'm all for it. If you make an informed decision with your doctor, but hey, somebody just I didn't see this before. So finally, a comment from Facebook. Poplo. I love that name. Where are you from? New York. Don't hold it against me. I'm one of the few non-leftists left here in the state. Now, going on to a daily chart of Pfizer, I think it's bearish. I think that what we're seeing here, I'm going to take these automated trend lines off, and here's the value, folks. Take them off. This is what we're seeing here, in my opinion, is a dead cat bounce, right? We closed down below support on Friday. I think that on a new daily low, this could be shorted. But again, I would just be worried about that 51.50 mark because you're going to get a breakout point defense. So that's the only caveat I have about Pfizer. Now, if we start putting in new higher highs here, then I would just stop out, take a small loss, and not worry about it too much. And I thought I was the last conservative. No, you're not. You're not alone, my friend. You're not alone. Let's have a cocktail sometime. Hang out. Uh, we'll wear Kevlar vests while we have our cocktails. All right, CL for Paul Franklin. I'm going to go to yours next. I happen to like this space. It's a staple company. The monthly charts are not looking good, but we're holding support. We're in a consolidation range. And again, I didn't draw those lines. These are automated. So really good support here. I think that this is a buy. because you know exactly where to put your stop loss, and it's just immediately below. It's not that far below. So if we fail to hold $74 per share, I would keep it a little bit looser than that. Give yourself some room. If we fail to hold $74 per share, I would stop out. But right now, I think that, VIX is rising. I guess that's my IWM or my small caps alert. Yeah. VIX is rising. The alert was for a new lower low, and we got the new lower low. We're now negative again on equities, at least the small caps. Taking a look at the NASDAQ now lower. Remember that we had opened down, and what we want to know now is, do we break to a new lower low? Because I'll tell you the problem here is that we broke out late afternoon on Friday. We did a retest this evening, attempted a continuation move up higher, which we did, but it was rejected. Now, believe me, what they're doing right now is that they are trying to find out whether or not this is going to break. Do we break to new lower lows? What happened to my alert? I had an alert right here. My alert's gone. Am I losing my mind? All right, it's not even letting me set an alert again. I've had nothing but trouble with Thinkorswim lately. I was on with their help desk the other day for like 3 hours. Okay. All right, so we'll check back in here to see whether or not we get a break to a new lower low. Let's check in with the S&P 500. It is now down as well. Here it's letting me set an alert. What's the issue with the small caps? Okay, now I can do it. Ugh. At or below. Okay, we're good to go. Back to Colgate Palmolive. All right. So I'm liking it. Nice reversal bar last week. I think what's happened here is that you've seen a lot of money rotate into uh, growth again, and I think that's a bad move, especially with yields on the rise. Money came out of staples when they shouldn't have. So I think that Colgate Palmolive is a buy here because you're buying the pullback. The trend is clearly higher on a monthly chart, not so much on a weekly chart because we broke weekly support. Did we close back above it? This is a buy. We closed back above it. Here, let me illustrate. Bam. We got it. We're going to get a retest tomorrow of this support level. My guess is that it holds. And we're good to go. All right, what else do we have here? Daily chart. What time do we have? 6:51. Daily chart looks good. We're above support. RSI is rising. Let's bring up our Stokes. Stokes are rising as well. Good stuff. So Colgate Palmolive bullish. All right, for Franklin. Okay, I think we just got a new week, new lower. Yep, there we go. Let's see how much is behind this selling. Buckle up, folks. This is why the strategy that we've used for quite a while now, since April of 21, is that we've kept an inflation portfolio, generally net long, very little selling, only additions, and our options trading account. We pretty much we just go into each week with a ton of cash because we're always worried about waking up on a Monday morning with a very volatile market. Now, if you're totally invested or you're near fully invested, you're on your heels and not on your toes. You want to be on your toes and take advantage of these difficult situations. So that's the game plan, and it's been working out for us pretty well. Not much behind this selling so far. So okay, let's bring up GLNG. It's an animal. I mean, it's going up higher. Here's your rising upper band of resistance. This is a monthly VWAP. We're right at it. So let's take a look at it on a daily chart. Just beware here. We're extended leverage relative to the third standard deviation Bollinger Band. I would not chase this. I would not chase it. If you're going to do it, no matter what I say, fine. Just use a trailing stop loss order. Strong trend line, but I would not buy it here. I think it's going up higher, but it's too late for me to get involved. Would I sell it? No, no. If it's a swing trade, I would probably use a trailing stop loss order, let the market take me out of at least a portion of my position, and then look to buy back in at a lower price. But otherwise, this thing looks like it wants to go to the moon. So I'm very bullish on it. CPLP, Capital. Wow, beautiful breakout. This is going higher. Here's your breakout. Nice. Uh, if you're looking to buy it, I would wait for the retrace next month if it happens. And there you have it. That support levels at around $16.70. You know, you're not going to get it to the penny probably, but in that neighborhood, that would be a good entry point. Weekly chart, it's crazy. It's well above the third standard deviation Bollinger Band. I would not buy this stock here. I would wait for the pullback. Daily chart. Again, trading above the 3D Bollinger Band. It's not supposed to be there. If this is going to correct, can it move up higher? Sure. Probably up here, $19.17. If you are using TrendSpider and you're looking to get out, set your alert up here. Touch, bounce, and get notified of when you're in that neighborhood. That way you could lighten up on some or all of your position. All right, we had a couple of others. Zim. So yeah, Zim, this is a cyclical name, and it was looking really, really good. I did a video about this. Yeah, this is a problem. Monthly chart. This is classic topping action. You know, we got a few days left to go in the month. But man, a lot of damage has been done here. This got way too ahead of itself. Weekly chart. We're coming down here to 65 bucks a share. The question is, does it hold? Stokes, double top, lower lows now being put in. Daily chart. It's coming down here, 65 bucks a share. We'll see if it holds, but keep in mind that the macro picture is this. If we close out the month with this candlestick looking like the way it is right now, I have to say it's a top, at least for the next several months until we consolidate. All these people up here get their money back or sell, capitulate, and then we could resume the move up higher, assuming that the catalyst that caused us to move up higher is still present. So just be careful with these cyclical names. They have boom bust cycles. Sava. Yeah, this is a very similar chart as to what you saw on Zim. Totally different sector. But here, bearish reversal bar. That was back here in July of 21. We put in a high back then of 146.16. We don't know. Jesus Christ. We closed on Friday at $40.17. That being said, I like the chart. I think it's going up higher. This could be bought. It's really respecting the support level. I believe this is the VWAP. Yes. So it's holding support. I would nibble here, tight stop underneath the lows of the month, and then add more on a breakout at around here, 55 bucks a share. Weekly chart, it broke out broke out the week before last. Last week, a continuation breakout, higher lows, higher highs on Stokes, good stuff. You got resistance up here at 41 bucks a share. So it's going to have to fight through this. So no rush. You're going to have backing and filling here. But I think longer term, you're going to see a resumption of the uptrend. Tom Liu, ex-dividend date of $17 per share. Good point. Yeah, Bitcoin is rocking right now. Your Zim chart is not adjusted for $17 divvy from Tuesday, ex-dividend date. Thank you, Trader Isaac. You're welcome, Franklin. You're already in. Good for you. Good for you. Okay, folks, that is it for another Sunday. Please be sure to like, Subscribe to the channel. It really helps me out with the YouTube algorithm. TrendSpider, 35% discount code below. Thank you for being here. Have a profitable trading week. Don't chase stocks. Still very overvalued, okay? Please don't chase these stocks, especially growth stock. Remember, Colgate looking really good. And yields are moving up higher. Equities moved lower initially tonight, rallied. Then we have a breakdown. So not looking good in the equity market. It's a long way until tomorrow morning, 9:30 a.m. But these are little clues that the markets are sending us that we're on thin ice. So be careful. Book profits when necessary and stay off margin. Have a profitable trading week. Be well.